Economist John Lonski joins me now. Okay, John, Trump wants the Fed to lower interest rates. They probably won't lower them today, but should they, in your opinion?
I think they should go ahead and wait. I mean, even though we've had good news on inflation, we're still getting good news on the real economy. Spending's holding up quite well. And so let's just see how much damage tariffs do to the economy. Ultimately, I think it's going to be the performance of the economy that might overrule possibly higher inflation because of tariffs, and that will compel the Fed to cut rates.
Yeah, but the Brits have lowered rates, the Bank of Canada's lowered rates, the Europeans have lowered rates, China is about to lower rates. Why not us?
Well, we've had some, problems in the bond market not long ago. There's worry about inflation. It's conceivable that if we have a surprise rate cut, that could set off inflation fears and drive those Treasury yields higher. So we get Fed funds moving lower and the 10-year Treasury yield moving higher. And you don't want that if you're in the housing industry.
Okay. You got me, all right? I'm going to change the subject. U.S. imports from China just hit a 2-decade low. That's because of tariffs. Mm-hmm. What kind of shape is China's economy in as of right now?
China's economy is not in good shape. From a long-term perspective, China's economy is doing a lot worse relative to the U.S. economy. We're still doing quite well.
So they're feeling more pain than us.
Yes,
at this point.
The problem is this, though. China is a totalitarian country. The United States is a democracy. Sure. There's perhaps no political cost for Xi if he goes ahead and decides to play hardball with Donald Trump as long as he can possibly do it.
But let me throw this at you. There are widespread reports this morning in a variety of publications that there are hundreds of Chinese protesting publicly at factories which have been closed down. That's not exactly civil unrest, but it is civil opposition, and Xi Jinping don't want that.
Well, that's good news for Donald Trump in the United States. Let's hope that those protests build up and that the Chinese people make themselves known that they want to have some sort of deal with the United States to get this issue of fair trade practices out of the way.
You're not a tariff kind of guy, I know.
No, not at all.
But do you think there may be a happy ending to this if we can get wrap-up deals with most of the world?
Yeah, here's what I think. I think you can get away with a tariff of 10% on all imports across the board without doing a great deal of without doing much discernible damage to the U.S. economy or to inflation.
Because we get some money from that tariff revenue, and some importers would eat the price increase.
And it's very important that we have more manufacturing activity in the United States, especially as far as national security goes. I mean, I'm concerned about the fact that we rely so much on China for pharmaceuticals and perhaps rare earth minerals. But let's not forget, if we want to have more manufacturing in the United States, if we want to mine more for rare earth minerals, I think we need something in terms of less regulation, environmental regulation perhaps, as well as more in terms of tax incentives.
Got it. John, thanks for joining us. We'll see you again soon.
Thank you, Stuart.
Yes,